Well, hello, everybody, you trader nerds. Good to see you. Welcome into a beautiful Monday here in Georgia, 2 miles from the Alabama line. And good roll tide to everybody. The tide looked kind of sluggish at times, but pulled it out in the end against South Florida. But anyway, real traders never trade alone. They trade with their fellow nerds like 12547, like Austin, like Ben, like Carl, like Daniel, like DB, like DMT, like Dwayne, like Edwin, like Hal. We missed you, Hal, on Friday. Jason, Jim, John, Ken, Matt Jollywally, Matt G, Mikey, Mo, Stephanie, Tim, Trader, Nick, and Victor. Welcome in. And we've got us an update in the market. Look at this, over 1% up. I was hoping it would be a big down day today, but not to be, not to be. Uh, VIX is at right at 20. AD is a strong 390. Wow, wonka wonka. And we were up, down a little bit, and then the AD is flinching back upwards. Let's see what the the big green monster looks like. Well, I'll be darned. Look at, we got support down here at 5402. We should have went long, 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 baby, because we had support down here. Should have went long, but we are still oversold. So we anticipate that we will probably bounce back into this area. Who knows? And then let's see that our linear regression is back into the channel now. So, still hard to tell. It still looks like we're in a downward progression, but we'll see what happens there. All right, let's go to the old account today. Let's see how we're doing today. And we are at 99. I know some of y'all are just on your heels, ready for an income trade. So we are at 75,988, 988.76. So we are up a little bit. Look at us. Well, we're moving on now. Moving on up to the side. To a deluxe apartment in the sky. And our Greeks and ratios are Delta 0. Look at that. 0 and negative 39. Wow. 0 and negative 39. Let's put that in. 0 and negative 39. That's interesting. And our buying power. See what that is. Let's go over here to cap requirement and do this up. And we are only at 29.31. Wow. Wonka. 29.31. And let's see how our little hedge is doing today. So let's see if we still got it over here. I want to make sure we still got a hedge. If so, let's update price and IV. Yeah, we still got a hedge, $31,000 to the downside. Make sure everything is marked over here. So we've got a hedge for sure. So everything looks really good. With our hedge, everything looks good. Now, some of y'all are sitting here going, Bobby, you need an income trade. And we've looked at some on Friday. Let's just see let's do a little back testing here. And if you guys would like to get option Omega, if you'll look down in the description of our video, I've got a little link there that gets a little discount for you. If you'd like to sign up, you can sign up for a short term, I think for a month, or you can do a year, and it'll get you a little bit of a discount. But let's go to option Omega a little bit. And let's just look at what we were doing with our 111s. We'll go from 2013 to 9524. We'll do SPY. We'll do Delta. And we'll do, remember, we were selling the 10 Delta at 120 days, right? That's what we were doing. And start out with $100,000. We'll say maximum open trades would be 10. No, 15 is what we had before, right? We do 15 open trades. And let's see, let's open up at 9:45 a.m. Do it on Monday. And profit target. We were going 95% profit. Remember that? Or a 2x stop loss. Let's just see what that looks like. 95% profit target, stop loss. What did our And this is without the put debit spread. So this is us doing the 111 without the put debit spreads. So it's going to take a little bit of time to run here, but let's just see what this looks like. And then maybe we'll take some notes here on this. So let me move this out of the way and see what the drawdown is on that. This is a great little program. And you sit there and go, man, I got to wait 45 seconds. But for the amount of data that this thing goes through, I mean, that's really, really good. So we want to try to find us an income trade. What if we just done the 111s? 95% profit like we did, and 2x loss we get out of it. And we had a maximum of 15 of these things open. See what this looks like. And this would be going from January 1st, 2013 to September 5th, 2024. So that gets us through the August 5th event, which was pretty bad. Let's see how bad it was in our little thing here. Come here, little fella. So if we had started out with $100,000, what would we have gone up to? It's the longest term 45 seconds I've ever seen. Except when I'm doing a plank, when I'm working out, oh my gosh, the last thing my trainer makes me do is planks, and I have to do them for 30 seconds, and sometimes I have to do them for a full minute, and that is the longest minute of my life. Okay, so let's see. This has a return of 16.9%, had a 28% drawdown, which is, pretty big. Had a capture rate of 44.5%, and your ending capital, you started with $100,000 and you went up to $612,000, which is really, really kind of good, right? So let's do a new back test. And what we were talking about is doing leaps of some sort and just see what leaps do, going out a little farther. So let's do a new back test, and let's do the 16 delta put. Now, for those of you that sitting there going, how are you determining the 16 delta? We did some testing in our Muscadine Mafia section on Friday, and we found out some cool little stuff about this. So let's just see what this does. 365 days going out at a 16 delta. Let's see, with this one, let's do a max open trades of 10. We wouldn't have as many, and I might use 8 on this too. And then on this, we found out that doing your profit target at 25 was really good. Let me take a screenshot of this. Stop loss at 200. Let me snag this right here, so we know how we can compare if we were doing the 111, so to speak. That's kind of what we got there. All right. So we got that saved. So 25%, 200% loss. I think that's everything that we need. Doing them on Monday. And it was weird when we did the back test. Monday was the best day to do the trade on the leaps anyway. So we just keep everything consistent. And actually, I did a thing that said, hey, what if you did them at noon instead of at 9:45 in the morning? And 9:45 in the morning was actually much more profitable than doing them at 12 noon. How about that on a Monday? But Monday was significantly better than Tuesday, Wednesday, Thursday, Friday, which was kind of strange to me. But let's see what happens here. Now, some of you have warned you need to get into the detail of the actual trade log, because there may be some wonky stuff here, but I understand that. But let's just kind of run this as is, and I'll spend some time in the weeds a little later, but I don't think you guys are here for that. I don't think you want weed type stuff going on. So let's see what this kind of goes up with. This is why we were thinking, my thought first of was we'll go scalping or we'll do 0 DTE, and then someone recommended that we go farther out. So let's see farther out and see what we can do here. Okay. Now, this is really, really good, y'all. Now, the problem is, just show you the difference here. Your P&L is $2.6 million, right? Your adjusted return is 32.4%, which is twice of what the 111 would have been. Here's the deal. Had a 45% drawdown, right? Compared to a 28% drawdown. Win percentage was 84% here, 97% here. And your ending capital from that time would have been 100,000 to 2.7 million. You're averaging 40 days in the trade. So that's kind of cool. Now, what if we had done, let's see if there's anything we want to do here. Now, here it didn't show, let's see, this is 7/7/24. You see there is a big dip there, but we were up as high as 2.7 million, and we're at 2.6 at the end, which is kind of cool. So I don't know. Let's see what happens if we allocate only 10 trades. Let's see, 32.4. Y'all remember that? 32.4. What if we had only allocated 8 trades of these open at a time? But I was pretty excited about this. I thought, this is really good. So Bobby, Matt Jolly Wally says, I sold 3 short puts 24 days ago and have not been able to buy any longs. What should I look to do? Number one, do you still have a hedge, Matt? Go to this and let me know if you still got a hedge. If you still got a hedge, you really don't need to do anything. You can still wait. If you don't, you need to do something. You don't believe you do? Then can you close those 3 shorts for a profit? Are they profitable, those 3 shorts? You could close them. If not, you could diagonalize them and buy 5 in a 30-day expiration, barely. Well, if they're profitable, I'd close them. That's what I would do. And then I would set up a diagonal like we did, go out 120 days, diagonalize it, and set up a new 90, 120 diagonals, what I do. Okay, so if we limit it to 8, this goes down to 1.8, but your still return is 28.9%. Look at this, though. Your drawdown is much better, isn't it? Your drawdown is much better if you limit that to 8 of those.
Bobby?
Yes.
Well, to compare apples to apples, you should really look at the MAR ratio, because you can size up or down, so it doesn't matter so long as the MAR ratio. So this one, out of the 3, this one is the best. And if you want more CAGR, you will increase the max drawdown at the same time. But MAR ratio will give you a quick comparison between the 2 trades, and then you just size based on what CAGR you want.
And the higher this MAR ratio, the better, right?
Yeah, the better. The first one was 0.6, this one is 0.7, and the 0.7, this one is 0.8. So this one is the best. And then you can just, if the max drawdown is too high for you, then you lower the number of trades or whatever frequency or something,
yeah,
to get to the drop down you target.
Yeah. Good, Victor. Good. Is the max number of open positions variable? The buying power usage parameter? I'm not exactly sure, John. Not exactly sure. But this looks pretty good. Now, what you'd want to do is figure out how to size this thing, right? So let's see if we, let's go to ES. ES might be too big for this account. Well, let's just see what it does. If we traded ES and we went out to 360 days on a Monday, so we'd probably go to this 374.
Hey, Bobby.
Hey, Hal.
Yeah, if you're gonna, you were talking about in the Muscadine Mafia doing this in the MES, but if you're gonna do that, you're gonna have to run your simulation at like 168 days or
Yeah, at
something.
168 days. You're exactly right. Let's see if we can run it in this account. So we said go to 16 delta. And now y'all are saying why 16 delta? Well, Tom King does like 12 delta or 14 delta, but we kind of run it and we kind of like the 16 delta. So we're doing a little different than what Tom does. But if you did that, we'd sell this 4,700. And that's $1,500 in buying power. Y'all kind of remember that, $1,500 in buying power. Let's go to sizing calculator and let's see if we can figure this out. So if we went to position sizing, all right, so it's got my net lick, buying power per, let's say this. What did we say that was, 1,500 or what was it? Yeah, 1,500. See if we can figure this out. And we're looking at holding those for, what did it say, the average
40 days.
40 days? So that would be what, 7 times 7 would be 40. Let's do 8 weeks. I'm gonna leave 10 weeks on here. I'm gonna get rid of this 11, 12, 13, 14. Let me just get rid of this. So 10 weeks. Then I'd kind of like to know what the buying power is for this thing after 40 days. So let's go back and let's see, 374, that'd be 334, the 4,700. Remember 4,700, Hal? So that would be 34 days in. So let's gonna go see what that 4,700 is here. Sell that. Oh. 4,700 is 1,250. Doing just a little stuff here. Yeah, let's see. 1,250. Okay, now what is our target buying power usage? Is whatever Tom uses about 33%, but I would use whatever the VIX is, and our VIX being at 20 would probably be 30%. I'm thinking it'd be 30%. So my target BP is to do this at 22,750, 796. Let's see if that's right though. Target BP is 30%. B2 times B6. B2 times B6. Okay, yeah, that's our target thing. So buying power per week would be B7 divided by, let's say, 10. We want to build these up over 10 weeks. Okay. So my buying power that I could allocate per week is there. Let's say that our beginning date is 9/9/24. So I could do 1.66 per week of this in the ES. It's kind of cool. So I could do one a week and just be fine. After 2 weeks, I could do 3. So I could do 2 more next week. But I just want to take it kind of slow, y'all. Just want to take it kind of slow. And let's see what our hedge would be if we're going to do this. So let's go and doing one of these, see if it totally destroys our hedge or not. So this is our little thing here. So let's go back over here and let's go add order legs. Yeah, see what happens? You got to be ready for that. You got to be ready for that. Is it just hedge check and tasty? Yeah, and this is under the risk analysis, right? Risk analysis. And just selling that one, here is that one. And if we get up to, I mean, this is what's kind of scary on this thing. You get up to 10 of those things. I mean, we're talking about, hey, we're back into the, we're back into the doldrum, so to speak, of taking on really, really, really big risk, y'all. I don't know. Let's talk it out. What's your gut thought? Al, what's your thoughts?
I think he could only usually carry just 2 or 3 of those at most.
Yeah. Yeah. Yeah, because if I carried one of them, I'd be fine with that.
Hey,
I
Bobby,
think in my IRA account, it was showing $10,000 worth of buying power for one of those.
Yeah. And Mikey says, right, it's still a naked position. You're right. So I would be comfortable with this type of risk, knowing that I've got a 84% probability of profit on this. But yeah, I think we just we gotta be careful, y'all, whatever we do. Who was gonna say something else?
Bobby, this is John.
Hey, John.
Yeah, what I was going to say is, and this is what got me a little nervous on Friday thinking about doing this. It seems that this is a good strategy as long as you maintain this hedge status. And it seems that using ES in an account this size, you're going to have a real big wall of hedges before you could actually go into this with a lot of confidence. Because if you're only going to do a trade once every 2 weeks or once every 3 weeks because you need to keep your sizing low and not be over leveraged, now you're just playing roulette with, did you pick the right week to open the trade?
Yeah, you're right. So probably, John, I think if I'm hearing you right, probably we need to do something like MES in this, right?
Well, MES is an option other than you got the limits on the DTE.
Yeah, we don't have all the cool DTEs over here. So let's see if we run our little back test. And we did our back test with 165 days. And Ben, I moved the valuation date back to today. Good catch there. Sell a put 160, so we'll do 165 days. Let's see what this looks like. Remember that MAR number of 0.8. See if this makes big of a difference or not. Because yeah, let's go back now while that's running. And let's do let's take that order leg off. And let's go back here. We're gonna find something, y'all. Yeah, TK, what about doing something smaller than ES like MES while the hedge wall develops? Yeah, that's probably the easiest thing to do. So let's see here. If we went 165 and we went down to that 16 delta. Now let's look at this. Well, first of all, the buying power is a credit. Unbelievable. And it's because I've got so much negative stuff on now. So let's now look at it as back here. And let's add order leg. Take order leg off. Put order leg on. That's much better, right? You still got the hedge. Yeah, probably something like that. Just to, what we're wanting to do is just to even out that theta a little bit, to give us a little bit of theta. Let's see what our little back test over here says. That's still 12.8%. Maximum drawdown 26%. This number went down, Victor. 95% win rate. And you see here we were at 479,000 and we really got taken down to 411,000 there. So a 26% drawdown. But what we're trying to do, I think what I'm trying to do is to say, look, let's keep the wall going. But let's try to, instead of having a little bit of negative theta, let's get a little bit of positive theta. I think that's what we're trying to do. And I could do it this way. The problem from MES is the low liquidity in comparison with ES when the market drops suddenly like we saw on August the 5th. Well, that's certainly correct. Good thing is, if you've only got one of these, I don't really care so much, right? Because I've still got my hedge and I've got a little bit of theta here. Let's see if I bump this up a little bit. 2, 3, 4, 5. 5 contracts and I've still got a hedge. 6, I'm still good. 7, 8, 9, 10. I'm good there. I mean, I'm good with this, the loss, that being the loss. If I did one every the week in MES, let's see how much credit we're actually taking in on this thing.
But Bobby, what's the purpose of doing that if you're trying to build this strong hedge and then you completely nullify it and go into minus on a black swan event, then what is the purpose of the whole thing?
Well, you're right, Victor. That's what we're trying to figure out. Is there a happy medium between the two? So with this, we'd be pulling in a credit of $386. $386. I mean, it may not even be worth doing it. I agree with you. If
Yeah,
you
because you're going to close it with just 25% of that pocketed.
So 386 times 0.25. I'm bringing in $96 a week, so to speak, right? I mean, now we could put in the negative expectancy of the ones that hit 2x loss, but let's say if we're bringing in, if you're laddering these on one a week, then you'd be closing these one a week. That's ideally what you'd like to do. 96.5 times 52 weeks, $5,018 divided by a 70, what is it, $6,000 account? 6%, plus we're right now getting 5% or so on bill. So we're looking at 11 or 12% a year. I don't know. I kind of agree with you, Victor. What's the point if we're going to, mess up our thing? We're going to have to figure out, are we going to be hedgers and ready for the next event? Or are we going to, and hopefully do it for free? Or are we going to sell a little bit of premium out there and keep, DB, there's no profit without risk. That's true. And Stephanie, I haven't used option Omega yet, but a capital gain of 2.7 million versus 400,000 seems like a significant trade-off on this analysis that you haven't mentioned yet. Is the capital gain not a reliable number in option Omega to take into consideration? I think it is a reliable thing. Now we would need to get into the details of the, like we can go over here, to the trade log and actually dig through the trades. Kind of go through those, but there were 544 different trades there. So look what the losses came. Look at this. Those puppies were losers and loser big. Yeah, I don't know. I'm gonna think about it. I'm gonna study about it a little more. So the thing is, I want y'all to be able to generate some premium and selling premium if you want to. And if you don't want to, and you just want to build the hedge, build the hedge. Any other comments on it? I mean, our hedge is doing great, y'all. Look at this. I mean, we know we should lose $1,200. On the first, we bought $1,200 and we're down $510. I mean, I'm fine with that. Holding my hedge and knowing that all additional hedges are going to be free. So let's get rid of our order legs here. Knowing that I could be up 23,000 is good. If I want to sell some premium, I could be up 19,000. That's fine too. But I don't know. Victor, I think Victor's saying, hey, you're either a premium seller or you're a hedger. You got to choose one or the other. So we have decisions to make, and nothing is going to be solved today. All right, guys, I appreciate all of you. Hope you had a great time with us today, and I will see everybody. I'm not making this trade today because I'm still going to think about it, but I will see everybody tomorrow.
Hey, Bobby,
Yeah,
why don't you check some credit spreads possibly, because your loss is limited.
Yeah, that's true. So we could do a credit spread in ES, right? So let's set that up. Let's go back, new back test. And select a strategy. Long call spread, short foot spread.
You're not sharing the screen.
Oh, I'm sorry. Okay, honey, love you. All right. So let's go back to 365 days. Where's my days at?
A good idea there, Bobby, is to click down on the further down when it says like run it twice. I forgot what it says. Run it twice. Confirm twice. So because sometimes you have those crazy bid asks, and
I
then
can barely hear you, Victor. Can you say it a little louder?
oh, can you oof, can you hear me now?
Yeah, I hear you now.
Ah, okay. I was just saying maybe you can click down on that Omega thing you have where it says click. I mean, run it twice on exit or something, just to make sure that you don't stop out or take profit on some crazy wide bid-ask spreads. That you have, if you go further down, you can just at least tighten it up a little bit uh, when you, if you go further down. You see, let me see. No, further down. Is there more? You know, is there more down? Yeah. So you ignore trades with wide bid-ask spread, or you can go with require 2 consecutive hits at profit target. That way you ensure that it's a little bit more reliable.
Okay, so do this, ignore trades with wide bid ask spread.
Either that, or require 2 consecutive hits, or some of that, just a little bit to keep it a little bit more
Tighten it
realistic.
up a little bit. Yeah.
Yeah, some people use commissions and fees because those are given, but you don't have to.
Okay, good. We'll do that. Let's see. Where is my where does it show 365 days at? Where's that at? I don't
The
even see it.
DTE.
Where is it?
What are you looking for? The DTE?
Oh, here it is, 10
Yeah, right there.
DT. So we gotta go 365. All right, so we would buy the how far are you gonna make those, Hal?
I think you have to do 100 wide.
100 wide. So let's see what that delta is. So if we were to go well, it's doing it on SPY, isn't it? So let's say SPY. So we'd make it 10 wide on SPY. So 375 or 340, go 375. And you do the 16 delta. Would be 455 and go 10 wide. So 10 wide would be 445. Would be wouldn't that be right? 10 wide?
Yes.
So 445 would be a 14 delta, let's say. Let's see what it looks like on the ES. Let's see how wide that is. 374. We go 16 delta is 4,700 and 4,600. Yeah, it'd be 14 delta. Okay, let's try that. $14 delta. This is 16 delta. Okay, let's see what we got. We got 365. All right, let's run this. I really like Option Omega though. It's kind of cool. Really kind of cool. So what we come up with here. Hope you all had a great weekend. One of the old people at the Beatles concert shot a bird at my little redhead. I thought that was interesting. Good thing I didn't see it, or I broke the old hag's finger. Shooting a bird at my little kid. That's crazy. Because my little kid was up dancing. Come on now. Y'all were dancing with the Beatles back during the day, some of you. I was not alive in the 60s. Oh my God, what's wrong with this? Two instead of 14. Okay, I bet that's right. Let's try the new back test. So it's plus or minus, huh? Oh, you put one quantity plus or minus. Okay. Plus or minus. So we're going to do -2. Right?
That's not gonna work. That's not
What's-
gonna work, Bobby. That's like $2 down. You're trying to do, what are you trying to do? Delta or width? Like you want to do 16 delta, and how about the one that you buy? 100
Oh,
points
so
out?
this should be 10, shouldn't it?
No, it should be 100, right? You say 100 you want to do.
Well, this is on SPY though.
Okay. All right. Okay. Then. But did you make sure that you click this linked when you open the first? I would suggest you delete the long. No, go up. Delete the long right there, and then click on this chain link up there. Yeah. So that way it's gonna be connected to this one. Now click buy, and then go. And if you wanna go down, you should put -10, not up 10.
Okay.
There you go. Try that.
Okay. We're learning. We're
You
learning.
know, the other question is, will we try to collect 50% like the Tasty Trade thing, or stick with the 25%?
Yeah, we can try that. Let's try it. See what it says. I love doing this back testing stuff. Definitely thinks that still should be -2. So we'll see how this looks and see if we can figure it out.
You have to look at the trade log after it runs.
Yeah. That doesn't look that good, does it? Let's see. 432 trades. Trade log. Yeah, it's the 452, 442, 410, 400, 470, 460. So that's right. 8.5. Let's go to 50%.
Before you run it, how many days?
Let's see. Not sure how many days it was holding it. I could cancel it if you want me to. This comes up with. Everybody and ivory. I never was a big Beatles fan though. Wasn't really my style. I much preferred Elvis. Now I need to go see an Elvis tribute artist. I think that would be good.
Probably when you're running these and you know you're gonna be running a lot of them, I think it's better if you take a shorter duration just to, you know,
Oh,
select
yeah.
some
Yeah, you're
ideas
right. You're
and
right.
then put it long to, you know, make sure that everything works long term. Yeah.
Yeah, yeah. Yeah, because I think it only takes 15 seconds to run if you only did this for like 3 or 4 years rather than going back.
Yeah.
Ew. That doesn't look good at all. 25% is certainly better. But anyway, gives us something to think about. All right, I'm gonna let y'all go. We'll do some more back testing later. But everybody have a good rest of your day, and I will see y'all tomorrow.